Greetings, family. My name is Alex. This is Keegan and Nick. We're from the Kalamazoo Central Financial Agency. We'll be talking to you today about your finances, and we'll give personal recommendations for your financial future.
And today we'll start looking at some key metrics that will help you understand where you're at in your current financial journey. To start, we'll look at your combined monthly income, which is at $8,308 after taxes, your combined monthly expenses, which come to $6,813, your combined current debt of $91,050, and your combined investment and savings, which come out to $19,202. Additionally, we do recommend that you guys join your finances, as we believe that will be beneficial to your insurance, your taxes, and your credit, and it'll also make it easier just to account for all your finances. And with all these numbers flying around, we thought it would be good to give you guys just one big number to focus on, and that's your current net worth right now is at negative $71,848, which will be taking care of that for you.
We have noted that you have some goals you'd like to achieve. In our three-phase plan, we can help you achieve those. So in phase one, we'll focus on reducing unnecessary spending, purchasing new transportation, and rigorously cutting down on your credit card debt. In phase two, we will focus on expenses towards moving to Brighton, saving money for a significant down payment, and eradicating student loan debt. In phase three, we'll give advice on purchasing a house, finishing the student loan debt, saving for college, and maximizing your retirement funds.
We'll start off with phase one. Phase one is right now to about 6 months in the future. This is about when the baby will be born, and this is going to be when we're going to really try to cut down on a lot of things. In the following slides, we're going to kind of go over what phase one really entails.
Perfect. So we'll start off with your additional income. So considering your current financial situation and your willingness to pursue some extra side hustles, we do recommend that you guys both get a little bit of additional income. Marcus, we recommend that you work an extra 6 hours a week at the job you already have, which will result in extra $10,650 in gross annual income per year. Olivia, we recommend that you begin building an online clientele for your small personal training business. At just an extra 4 hours per week at $25 an hour would result in $5,000 a year. And a nice little thing about this is that it would help you transition to maybe an online full-time role after you have that child. Additionally, considering the post-tax implications of this extra income, so it would be your annual income post-tax for this money would be $9,539, which results in $795 a month.
So we're going to go over some lifestyle changes we need you guys to make. Your first one is unsubscribing from most of your subscription services. We think that keeping Amazon Prime would be a good choice at $140 annually, just because taking away shipping costs on any packages you may order is a pretty good deal. Also, in terms of streaming services, we recommend purchasing the Hulu, Disney Plus, and ESPN Plus bundle for $17 a month. This extremely cuts down on what you were paying previously. Marcus, we need you to quit FanDuel. We know you love gambling, but saving that $150 a month is vital to your finances. Your biggest down thing on your finances right now is going out to lunch 3 times a week and door dashing 5 times a week. That adds up quickly. So reducing that to 1 for each a week is vital. And we know you guys don't enjoy cooking dinner, but learning to meal prep for the week using free online recipes extremely decreases what you're paying in total. All these lifestyle changes can add up to around $1,800 a month in savings.
Perfect. And so now we'll look at your credit card debt. First, we'll talk about that $8,150 that you have from the collection agency in that debt. We would really like you guys to negotiate down. So we think that it's doing some research. We think 40% of the original $8,150 is a reasonable estimate for what you'll actually have to end up paying. This would be if you paid a one-time full cash payment, which we would get that cash mostly from that tax refund that you guys got. Any additional money would come from the savings that you have, and if the 40% is an estimate, so if it's higher, you'll have to increase the amount coming from savings, or you'll have to implement a payment plan. Okay, and then we do note that this collection agency, it will result in a little bit of a credit score decrease, about 60 to 80 points, but we believe that is beneficial in the long term. Now, going to the outstanding $6,900 and additional credit card debt that you have, we recommend that you transfer all of that to Citibank, which has a 1-year, 0% interest credit card plan. And we think that in 6 months, really aggressively tackling that credit card debt at $1,100 $50 a month. We can pay that all off in phase 1, which is the first 6 months.
Now we're going to go over some insurance stuff with you. So you're going to have a lot of medical expenses coming up. That's just the reality of having a baby. So we recommend you switch from your high deductible to a low deductible plan because this will help you pay less out of pocket in the long term. Low deductible plans usually have FSAs instead of HSAs, so we recommend you utilize that FSA strictly for funding the cost of general liraglutide drug at $2.99 a month, right? That's not going to save you any money, but it will make sure you don't pay taxes on what you're paying there. Marcus, we understand that your work offers life insurance up to 50% of your salary, but let's be honest, that's not enough if something were to happen. So we recommend you pay into a long-term life insurance plan. You're relatively young, so you should be able to get it for a cheaper price. You will have to negotiate later on, but that should be fine. This will pay much more than what your current policy offers. Additionally, your auto insurance is pretty jumbled at the moment. We recommend you combine these plans. Usually companies will offer discounts for bundling as many plans together as possible. Allstate currently offers a 25% discount for bundling, bringing the total cost of both of your policies biannually from $2,065 to $1,548 a month. Your pet insurance is currently $58 a month, and we really don't see a problem with that, so you can keep that as is. Your renter's insurance, on the other hand, you're paying $360 a year right now, and that's not even close to what the average of most people pay in Michigan right now. People in Michigan pay around $180 to $200 a year. Allstate currently offers one at $188, I think. So we recommend you should shop around. Your total savings throughout your insurance will be $56 a month, minus that $15 for that life insurance. Let's go into your transportation. So currently, we recommend you keep that Explorer because you actually have a lower interest rate than what you currently would be paying if you were to get any other car. And if you were to sell that Explorer, it wouldn't sell for more than $35K you actually owe. So you'd really just be going to a rounded net zero and whatever. So we recommend you keep with that plan of $500 a month for the next 24 months. Listen, we know Broncos are great, but we recommend you turn that in before the lease ends because you're paying a lot a month and you get no equity from that. So we recommend this used Toyota Highlander going for around $3,900. It does have a lot of miles on it, but it's more of a short-term solution. For that, you would be paying a 36-month loan with an original down of $1,000, and then this will result in your payment being $190 a month, a lot better.
So we recommend transferring $10,000 of your future down payment into a high-yield savings account. And this is a savings account, we approximate around 4% interest rate. So this will allow it to grow before you purchase a house. Additionally, in Olivia's Roth IRA, we recommend she invest in the Vanguard S&P 500, and this will have much more noticeable return rates compared to the Michigan Municipal Income Fund, which over the past years has not done very well. Finally, we recommend discontinuing the use of buy now, pay later, and replacing credit cards with debit cards and cash to reduce any interest fees and any additional costs.
So looking back at your phase 1 overview, this is going to be after the first 6 months. These are some numbers you can look at, but the one we'll be focusing on is the negative $47,216. So your net worth is going up or coming down, kind of. So there you go.
Now we'll continue into phase 2, which is from the timeline of 6 months to about 2.5 years.
Yeah. So at this time, considering the addition of the baby in the family and your current finances and your desire to move the family, we do think that you would be best in Brighton, Michigan. That being said, we just don't have the funds at this current moment to pay for that big down payment, that over 20% to reduce the PMI. So we can't recommend that you'll purchase a house quite yet. But we do recommend that you purchase an apartment at $1,455 a month with a $40 pet fee, and then we actually allocated $2,000 in moving costs, which we've accounted for in your net worth.
With Marcus's future career, given his skill set in the automotive industry, we have 2 options for him. Either he can work at his old job, which is a 40-minute drive there and back, or he can get a new job with the same skill sets and similar pay rate. While Olivia is on maternity leave, we highly recommend that she invest in her online business and gain online clientele. After her maternity leave, she can either find a new job in Brighton with her old skill set, or she can continue to expand on her online clientele.
Now we're going to go into the student loans. So in phase 1, we recommend that you refinance the private loan, and that's the one with the balance of $22,000. and then focus on paying this loan off first. It has the highest interest rate, and then pay off the other 2 loans, making sure to pay more than the minimum amount. In total, you should be paying about $13.73 a month. And then Marcus, start paying into that 401k now. Basically, that 50% that they're going to pay into is free money, so maximizing it to the $2,500, so they'll pay 50% of that. That's vital.
And then a quick phase 2 overview. We've gone through this, and now our net worth is about $11,428.
Now on to phase 3. This timeline is from about 2.5 years to the rest of your financial journey.
So I have the pleasure of now telling you that you are now ready for that house. So we have $90,000 in a down payment fund. Just quickly going over that, we're gonna have that $10,000 saved. Phase 2, that's 2 years, $1,150 a month, results in that $40,000 matched by the parents. That's $80,000, and then we have $10,000 in an MHSDA loan. That's 0% interest, and that's basically $10,000 based off the zip code and a few other eligibility requirements. You're going to have a conventional 30-year loan for this, and it's going to be 6.86% interest with $1,370 monthly mortgage payment. You'll have $1,200 in monthly property taxes and homeowner expenses, as well as $87 in homeowner insurance. Now, investing for the future, we will continue to do the $2,500 a year with that 401k, which is matched by the company. We will finish paying off all the student loans, and then when that's done, we will do $583 a month for both Olivia and Marcus going into that Roth IRA. And that's going to max that out at $7,000 and really maximize potential gains there. And then also at the same time, we'll start doing $250 a month in a 529 college savings plan, and we recommend you invest in the Fidelity 500 index for that one as well. Final overview, these are just some numbers. These are estimates. Because it's your whole lifespan at that time, it is difficult to get accurate numbers here, but those are rough estimates. And then finally, our net worth, 1 year into phase 3, $135,000, 5 years, $197,000, and finally, 30 years into phase 3, $2,082,000. That's it. Thank you.
Love the speed at which you read that up.
Put it at hyper speed there, man.
Great enthusiasm. Excellent. Great job. I really like how you broke it down into phases. It's a lot to take in, and by doing that, you really stepped it out and made it understandable for a chunk of time at a time. A couple of questions on the city bank credit card.
Yep.
You said 1 year 0%. What is the interest rate that kicks in after the 1 year?
So this it won't you know the actual figure?
I think it's
It won't apply in our situation because we'll be paying $1,150 a month, and that's 6 months. And that will pay off all the credit card debt. So we won't actually need to pay beyond the 0%. If we follow the guidelines instructed here, you wouldn't need to pay the extra after that 1 year because we'll have it all paid off in the first 6 months.
Okay, that wasn't clear at the time. Excellent. And then on the healthcare savings, is it the healthcare or the auto? This one, the auto.
Mm-hmm.
Number 2, the total cost, both biannually. Do you mean semi-annually? So that's the cost that we'll pay twice a year?
Yes, that's twice a year. That's actually just grammar error. Yes,
Okay.
it's twice a year. It's not once every 2
Okay.
years.
Excellent. Thank you for clarifying.
Yep.
I really loved your suggestion to switch from the high deductible health plan, knowing that they're gonna have expenses. Hypothetically though, if we're in April and the baby's due before the end of the calendar year, I'm not sure how many employers will allow you to make an election change that's not at the annual enrollment, but a very clever selection. So no question there, just a comment.
Oh no, I agree, and it wasn't really stated like when the baby would be due, so that's
Yeah. No? Good. Questions?
No, I think you did a really good job addressing a lot of the issues. Like the phase 1 and 2 is fantastic because, as advisors or planners, you got this preconceived notion of people do that. When you sit down with them, they expect all your problems to be fixed that day. Right. So it's good to kind of manage expectations, put a timeline together. So I thought you did a good job. And I don't really have. Oh, and I like that you utilize the Roth IRA versus the pre-tax deduction.
absolutely.
I think that's a good route too.
Thanks.
so much. Sounds good.
Well done.
Thank
Good
you
job,
guys.
guys.
Yeah.
Would one of you guys be kind enough